Now, I don't need anything crazy, okay? I just need a $700,000 barn door, a big wedding, some kids, the wife needs a Tahoe. Welcome back, everyone, to the $100,000 to $1 million public account series. If you're new to the channel, I took $100,000 cash of my own money. We're turning it to $1 million on the open market. All of my trades are completely disclosed, and you're welcome to follow along. So let's get into it. We finished up a little red today. However, we were up big in post-market last night following the Nvidia earnings that we're going to be talking about today. I want to highlight here, SaaS stocks are absolutely ripping today, okay? Salesforce came out with a crazy earnings report, and now Salesforce and ServiceNow are absolutely ripping. However, we have some commotion going on in the tech space, in the chip space. I believe in the last episode we were around 127, 128,000, so we are comfortably above 130,000 now. And the big thing about what we're going to be talking about today is how we are going to traverse the waters around this big Nvidia earnings report and the market's reaction to the Nvidia earnings. So let's get into it. Nvidia came out with a $96.2 billion quarter. Okay, these are unheard of numbers. This is a record breaking, like always. Every quarter, Nvidia breaks their own record. So this 221 right here was intraday trading. They finished the day out around 228, which put them at about $5.7 trillion of market cap. So that's the thing. With every dollar that the Nvidia share price goes up, if it goes from 5.5 to $5.7 trillion, that's $200 billion. As you can see here, this was just before earnings. It traded off, and then earnings came out, just absolutely hung a Yui and got vertical. So this 221, I thought this was up about 6% after coming out with $96 billion in a quarter. I thought that was a bit underwhelming. It's a bit more fair up in the 228 range, but it's still failing to break that 52-week high. And the big thing too we'll get into is that little guidance raise, okay? They're guiding for $108 billion in Q3, which shows us that there is no sign of slowing in this spend here. One thing I found interesting here was the GAAP EPS, okay? GAAP stands for Generally Accepted Accounting Practices. Essentially, it's the appreciation on the investments on top of their EPS. So at Nvidia's size, I found it a bit underwhelming that it's 24 cents on the EPS. However, again, still an absolutely huge number. Look at this net income. Net income in a quarter, right around $60 billion. That's absolutely crazy. And then an operating income of $63 billion. One metric that also got me was the gross margins of 75%, which honestly highlights to me their dependence on Taiwan. This sort of shows me that all they have stateside are software engineers, and that everything else is outsourced to Taiwan, which this isn't necessarily new information. However, it does highlight their dependence on Taiwan. Okay, next, revenue doubled. Again, I call this a danger zone, okay, because here's the thing. This is what I'm talking about. I don't think that these chip makers, these computing giants are going to fall on their face. However, the growth has to slow at some point. And if you're suggesting Q2 of 2028, they're going to do $190 billion of revenue in a quarter, I don't think that's possible. So another little dangerous statistic, okay, 90 billion of the 96 billion came from data centers, which again, this is not new information. And we got this Q3 guidance raised to $108 billion of guide, which makes me honestly a little cautious looking at the hyperscaler saying, well, all these dollars are coming from somewhere. So it's not like Nvidia is necessarily saying that this spend is going to slow down. So the takeaways from this, okay, bull case, obviously demand is still accelerating. Data centers doubled again. $108 billion of guidance. And the bear thesis on Nvidia is that it's priced to perfection as it sits. So there's only bad news that could negatively impact the stock. There's really nothing new that could come out that would force Nvidia to the upside. And of course, if you've been watching the series, everyone knows my angle on Nvidia. It's that we know they're executing. We know they have great sales. We know they have great margins. However, at a $5.5 trillion market cap, is there enough room to expand for new money to make money? However, there are angles on this earnings report to get in and make money. Look at MUU. We're out of this position now, but we were up another $1,000. I called this out in the last episode when I bought this, and I bought in with only a $6,300 position. So we just printed $1,000, got in and out. And if you look at Micron from a fundamental perspective, I mean, they have a price to earnings of 21, a forward PE of around 4. Now, we know the growth is going to slow. However, for this quarter, given the earnings and the guidance, we know that we have an extended time period as of now for the smaller beneficiaries of AI to still get in and make money. It also just so happens that after we exited this position, MUU actually finished the day red and was under our initial buying position, so we bought back in. Okay, the next big one, Bloom Energy. This is another small position, highly volatile stock. This is a $64 billion market cap company, and we know, again, energy, there is no shortage of need for energy. Now, they do have a ridiculous PE ratio, but that's why we take these smaller positions. Okay, $6,800. This was another $1,000 printed. This one, we're still in the position. There was even a little bit of pullback today, but we're still up over 12% on this position. And there's also a 30% upside just to get back to its 52-week high. So with how the market is trading right now, how will we get into that bag? We're going to get a brick. We're going to flip it. We're going to get 2 bricks. Then we're building a brick wall, baby. Look at the S&P finished red this week, okay? We managed to finish 6% in the green. That's $7,500 on the week. We're up $20,000 on the month. So it's always a beautiful sign when you're able to make money on a red week for the indexes, because that only means, listen, when these indexes get bullish, we're just catching that big wave up. So we essentially just saved ourselves from the treachery of indexes this week. The Meta settlement, okay, this was big. 16.4 billion in liquidated damages. That hurts. That's going to hurt the EPS big time. Let's hope that it's priced in with its current price point. But if they came out and miss EPS big time, we know it's still going to sell off. However, we did get back green on this position, okay? We have $93.6 thousand of Meta. We are in the green, almost flat. We're up $310 at this moment. And here's what I've got my eye on. If you remember, I called out Celsius. Celsius went up 45% after my call out. It's starting to pull back into that buy range, so I hope that it continues to dump off, and we'll definitely buy back into Celsius. They had some interesting news coming out with the CEO of Rockstar wanting to potentially re-enter the company. I don't necessarily think that'd be great for Celsius. However, he did accumulate a ton of shares off of the open market, so essentially a free buyback. Our cost from the initial call out was $24.15. I don't know if we'll see a pullback into that range. Hopefully we do, because we would happily buy back in at this point. Next, Uber. Uber continued to pull back. We're a little bit red on that position. That's why we had an entry-level position. If that falls back into the lower 70 range, sub 70 range, we will definitely be increasing that position. Now, the big takeaways, all right? Don't chase. Don't overreact. We may see some impulse moves to the upside or downside. Nvidia did come out and set the bar high. As I've shown and as I've laid out, we can use this near-term volatility to add to our big stack positions. All right, the Meta, Google, Uber, Bloom Energy, Sterling Infrastructure, Uranium. And listen, the next thing is on a bit more serious note. I usually don't get serious. Listen, I'm the investments guy. I'm not the motivation guy, but a lot of the guys that watch this channel are my peers and people that I talk to and people that tell me that it can be intimidating to invest. It can be intimidating to do these things. And I completely understand, okay? I've had a lot of market exposure to this point, but when I first got into it, you honestly have no idea what you're doing. And that's why I created these hour-long conversations I would have with people about investing in the stock market. We're honestly doing more harm than good because it can seem overwhelming. So now there's a resource to point back to where you can get exposure through our channel. And especially to the young men out there, okay, 18 through 25. The best compliment you could get is people telling you, listen, you're young, take it easy, take a break, take some off work. Take that as a compliment, not as advice, okay? And people will see you going on your journey and they think, oh, it's vanity. He wants the big mansion and the Ferraris and all this sort of stuff. And I see a lot of people, it's pretty interesting now, they'll say, no, I don't need anything crazy, okay? I just need a $700,000 barn dough, a big wedding, some kids, the wife needs a Tahoe, Disney trips, the kid, more kids. You think this is cheap? You think this is cheap? I promise you that this account that we're showing, $130,000, doesn't get you this life. Doesn't get you close. You'll see on your journey, regardless of wherever you're at, that with each milestone you hit, it brings in the realization that you're still a small fish. And I'll tell a very brief story about a time where I was in high school. We were on a trip to Florida, and we were driving down the road looking at these beautiful waterfront properties, probably $10 million houses. And I remember a friend of mine said, you know what's crazy is I will never achieve that. I will never have that. And I sat back and I thought, that's pretty brutal, but it's true. You have one opportunity to get this life right. Don't let the fear of losing stop you from learning the stock market. Because I'll tell you one thing certainly. Every single rich person utilizes the stock market. And listen, motivation fades. You need to structure your life and habits around doing the right thing and traversing down the path less traveled. So moral of the story, don't let the intimidation factor or the complexity of the stock market stop you from chasing that dream. So my goal with this channel ultimately is to show you that the average Joe can come out and make $20,000 a month. I want your coworkers to wonder how you have so much money. And the honest answer to that would be you have a level of discipline that is unmatched. So to conclude, We're comfortably above 130. I anticipate us pushing into the 140 range here very shortly, especially given the volatility around these Nvidia earnings, okay? It can make for choppy, indecisive times in the market, and traders like us eat that up, okay? Make sure you like and subscribe. I will be coming out with another episode early next week. Drop a comment what you think is ready to get bullish. Thank you very much for watching, and I'll catch you in the next episode.